So in this video, I'm going to be going over a comprehensive guide on deducting travel and travel-related expenses for self-employed individuals such as sole proprietors and other single-member LLCs. I'm Ben Nader. I'm a CPA in California. I'm also a master's degree in taxation holder. I'm going to be using IRS documents and court cases to explain these concepts. I'm going to have it broken down by chapter and by section in the video, so if you want to skip ahead and go around, that's perfectly fine. And the reasoning for this video is if you go on YouTube right now and just search travel deductions for creators, the videos are 5 minutes long, 6 minutes long. I'm telling you can deduct everything if it's loosely related to travel. Completely wrong. The videos, they lack depth, and I'm here to provide that depth. Fully free. I'm not selling anything. I'm here to provide information on tax, further my knowledge as well as the listeners. So let's get into it. Before I go any further into the video, I want to just define what even is business travel. It's a very broad term. So business travel, as the IRS defines it, is travel that's ordinary and necessary for your trade or business and requires you to be away from your tax home for longer than ordinary workday. We just covered that. Here's the sources where I got that from. Key requirements, we just went over, has to be away from your business home or your tax home. Has to be for a legitimate purpose, so it has to be directly related to your business operations. And the primary purpose of the trip must be business, although there can be some personal aspects. We're going to cover that later in the video. And it has to be temporary in nature. Obviously, if you're there for your whole career, you moved. Doesn't really count as travel. So types of business travel, I made a little list. So client and prospect meetings in another city or state, traveling to discuss contracts, projects, business deals, conferences and seminars. So if you have like a 3-day event, 3-day training, for something related to your business, it can't just be a random training. It has to be related to your business. If you're a salesman, it has to be a sales conference, sales seminar. It can't just be a fitness routine. That doesn't count. If you're working at a temporary business location at a client site for like a week, if you're an accountant, if you're doing an audit in a client site, temporarily working in another city. If it's real estate related, you're traveling to another property in a different city or state. If you're a creative or a content creator and you're traveling for videos, this could be related. Brand sponsorships, meeting with sponsors, meeting with agencies. Again, I just talked about sales development. If you're, an accountant, lawyer, traveling to meet clients, employee and team retreats can be counted. And some things that don't qualify as commuting to an office, obviously. Personal trips, primarily personal, with minor business activities do not count. Although some of it can be deducted. If you say you're on like vacation in Hawaii and there's like a seminar, you can enroll in that seminar and deduct those costs, but not the flights. And travel that does not relate to current business. I just talked about this. Say you're going to a fitness conference, but you're working as a doctor. Doesn't count. Let's now go into what is even considered travel in a work setting and where is your home for tax and travel purposes. So you're considered to be traveling away from home if your work requires you to be away from your tax home for a period substantially longer than an ordinary workday. Ordinary workday is about 8 hours, so substantially longer is basically the whole day. Overnight, for simplification purposes. You got to be away from your work overnight. And you need sleep or rest to meet the demands of your work while away. Simply napping in your car does not count. Here's an example. A railroad conductor leaves for a 16-hour trip. He rents a hotel room, eats a couple meals, and then returns. That's considered being away from your tax home and traveling. A truck driver who just leaves and comes back on the same day with only a meal in between does not qualify. Now, what is your tax home? It's probably just going to be where you work for most people or your home and where you live. So your regular place of business or post of duty, regardless of where you live. So if you say you work in downtown LA, but you live in Long Beach, it'd be downtown LA. If you have multiple places of work, your tax home is the location where you A, spend the most time working, B, conduct the most business activity, or C, earn the majority of your income. Here's another example. If you're in Cincinnati for 8 months and you earn $40,000, then you're in Miami for 4 months earning $15,000, your tax home will be Cincinnati because you're there for 8 months and you earn most of your income there. If you do not have a regular place of business, your tax home may be the location where you regularly live. However, if you have no main place of business and no place of residence, you're considered an itinerant, meaning your tax home is wherever you work, and you cannot deduct travel expenses. So having a place of business or a place of residence is highly important for tax purposes. This part down here isn't too necessary. I feel like 99.99% of people have a tax home either where they work or where they live. So let's go to the next section. Now I'm going to cover deductible travel expenses. What are deductible when you're traveling? We just talked about briefly ordinary, necessary. But what's actually deductible from your travel? So transportation, obviously plane, train, bus, car expenses for traveling between your home and your destination. Ships, cruise ships have their own laws. I'll get to that in the end of the video because it's kind of niche. Obviously, if you're getting your tickets for free or frequent flyer, it's not deductible. Local transportation when you're there, so taxi, commuter bus, airport limousine, Uber, hotel from the airport, business at the airport, baggage and shipping, this is all deductible. Car expenses, so operating and maintaining a car for travel, We can do actual or standard mileage. Check out my video on Schedule C for information relating to that. Parking fees, business-related tolls, not fines, fees, important clarification. Rental cars, lodging and meals, so hotel costs, Airbnb, Vrbo, any of those things. Non-entertainment related meals, so food, beverages, taxes, tips, obviously limited to a 50% deduction. And you have to stay overnight or require substantial rest, as we talked about earlier in the video, for that to be deductible. Dry cleaning and laundry is deductible. Telephone, business calls, faxes, other communication calls, tips. Again, transportation to and from a meal, so like an Uber. Don't drive drunk, Uber. I don't know what a stenograph is. It was on the IRS website. I don't know what that is, so that's deductible. Computer rentals. Again, these, I don't know. This is an important topic because many people employ their family, wife, kids, in-laws. So you generally obviously can't deduct them if you just bring them along for fun. That wouldn't make any sense. However, you can if there's a bona fide purpose for them being there. So if they're actually employed, not just taking notes. People say, oh, my 2-year-old kid, he's just taking notes for me. It's like, it's not how that works. So if they're actually an employee, like on the payroll or actually contributing a large portion of the business, then that's deductible, obviously, because it's like any other employee. Here's an example. It's basically saying if you pay $199 for a double, but a single costs $149, then you can't deduct the full $199 because your wife doesn't count. It's got to be just how much a single costs. So you still get some deduction, but not the full for both. And then we just talked about meals. Obviously, they can't be lavish or extravagant. You can't just go to Nobu and splurge. High-end restaurants, again, it isn't automatically disqualified, but you can't just be like, oh, let me get 3 steaks and take 2 home. Obviously not. Again, 50% limit still. Make sure you keep meticulous records. I'm going to touch on that at the end of the video of just how important meticulous records are. I'll cover meal in a separate video, meals. But yeah, if there's a single expense with multiple costs, you have to itemize. You have to allocate costs between deductible and non-deductible. So if you're with people that aren't part of your business, then you got to allocate those properly. Hotel package includes meals. You must separate meals from lodging. You got to be meticulous. You got to have very accurate records. For business associates that accompany you, say it's a client, a supplier, or advisor, these probably are deductible if they're actually conducting real business. So you're not just discussing loosely business, bona fide purpose. You got a further relationship, and it'd be deductible anyways. Then yeah, that could be deductible. We're now going to go over traveling outside of the US. So how are those deductible rules considered by the IRS? So firstly, we're going to go over fully deductible travel and how do we achieve that. 1, if it's entirely for business and you do only business there, then obviously it's fully deductible the whole trip. Number 2, it's considered entirely for business even if it's not. So say you have some personal days in there. If you meet one of these 4 exceptions. The first one is you have no substantial control over making the trip. So say you're an employee and your boss says, hey, we're going to Brussels next week for a week. Then you say, yes, sir. I don't control that. I have no control over that. He told me to go. I don't want to get fired. Those people, you'll get a full business trip deductible. Self-employed people usually can't do this because they're their own boss, so they have full control over it, so they don't qualify for this. Number 2, if the trip lasts 1 week or less. So say you're outside the US for 7 days or less, not including the day you leave, only includes the day you arrive, the day you come back, then that's fully deductible for business. Here's an example. A person flies from Denver to Brussels on Wednesday. They leave on Wednesday, so that day doesn't count, but they arrive next Wednesday. So you count Thursday, Friday, Saturday, Sunday, Monday, Tuesday, Wednesday. It's exactly 7 days or less, so that's fully deductible for their business. Exception number 3. personal activities were less than 25% of the total trip. Here's a good example. The day of departure is counted for this calculation. If you travel abroad for 21 days and you spend 5 days on personal, but the remainder on business, that's 23.8%. That's less than 25%. So the entire round trip airfare and all the business related expenses, not the personal ones, are deductible. Exception number 4, vacation is not a major consideration. If you can prove that taking a vacation was not the reason for the trip, then it's still entirely business related. That's harder to prove. Stick to the first 3, you should be okay. We're now going to go over the partially deductible travel rules. Even though business is a primary purpose, if you're there for basically more than a quarter of your time on personal reasons, just to have fun. So you must allocate the round trip travel costs between business and personal days using a fraction. Basically, your numerator will be your business days, the days you were there working or some other certain situations, and your denominator will be all the days you were gone, all the days abroad. Here's an example. You spend 18 days abroad, but 7 of them on personal activities. You can only deduct 11 over 18, so you get that fraction, and you multiply that by your round trip airfare and your business related expenses. How do you count business days? Well, transportation days count to and from a business destination, so when you leave and when you arrive, unless you add extra personal time at the end of it. Then that last day does not count. Required presence. If your presence is required for business, that day counts, even if you spent some of it on personal activities. So say you had a seminar or a meeting for 6 hours, that day will count, even though if you spent the rest of the day going to a bar, going on to an amusement park, or whatever you're doing. Work days. Any day where your primary activity was business related counts as a business day. So you're doing the majority of your day, you're working. That's a business day. Weekends and holidays, if they fall between business days. So say you have to work Friday and Monday, those 2 days are going to count. However, if they follow business activities and you remain abroad for personal reasons, then they do not count. So say you're there Friday to Monday, but then you spend Tuesday, Wednesday, Thursday, those weekends do not count. Tuesday, Wednesday, Thursday doing whatever else, not working, those weekends will not count and your day will end on Friday. Example 1, you have meetings on Friday and Monday, Saturday and Sunday will count even if you use them for sightseeing and doing whatever you want. But then again, if you finish work on Friday, but you stay until Monday for personal reasons, then Saturday and Sunday do not count. So obviously this goes without saying, but if you travel primarily for personal reasons, not business, then none of the expenses are deductible. However, business-related expenses at the destination can be deductible. So say you go to Hawaii for fun, and there's a seminar there that's related to your business, you go there, that's deductible. The food you get there, lodging, could be deductible. An example here is that a university alumni association offers an international education trip that has general workshops not targeted at a specific profession. Even though some business-related sessions were attended, the trip is personal, and only the direct costs of the seminars are deductible. The related seminars, I might add. Here's another section for non-business activity along the way. So say you add a personal trip before, after, or during a business trip, you must allocate part of your travel costs to that non-business activity that cannot be deducted. Here's the formula. Numerator will be your personal days abroad, and the denominator will be all your days abroad. Here's a good example. You fly from New York to Paris for an 11-day business conference, but instead of returning home, you spend another week, basically another 7 days in Dublin on vacation, and then you fly back to New York. You were there for 11 days for business, that's bona fide, but then you had 7 extra days just to mess around. You have to reduce your airfare deduction by 7 over 18, those 7 extra days. So you were there for fun. How are you going to deduct that? So if the flight costs $12.50, then you got to multiply that $12.50 by 7 over 18, and you cannot deduct $486 of that flight. A rather interesting section is this luxury water travel and conventions on luxury water travel. There's certain rules behind it. I didn't realize this. So if you travel for business on an ocean liner, a cruise ship, or other luxury water transportation, maybe like a yacht, I'm not sure what else considers as luxury water, the maximum deduction you can take per day is twice the highest federal per diem rate. So here's a good example. If a travel agent is taking a 6-day cruise from New York to London in May for business, costing $6,200, we look at May, the per diem limit is $398, so double that is $796. So we do $796 for those 6 times 6 for the 6 days. The maximum deduction we can take is $4,776. Meals and entertainment, obviously still subject to that 50% limitation. So the total cruise cost was $6,200. Meals on the cruise was $3,700. Cut that in half, you can deduct $1,850 for that. Entertainment, obviously not deductible. Just that's the rules. Other travel expenses will be $1,500. So say maybe getting to the ship or getting back to the ship. Allowable deduction before the daily cap we calculated was $3,350. And since $3,350 is below that limit we calculated, the entire $3,350 is deductible. That's at $1,850 plus the $1,000 plus the $1,500. Now going into conventions and business meetings, you are able to deduct travel expenses for attending a business-related convention, seminar, a meeting. However, as we talked about earlier, you can't do it for family members unless they have a purpose to be there and not just taking notes. They have to be in the business and working for the business. Conventions for political events, social events, or investment purposes are not deductible. Being an elected delegate does not qualify as deductible. The agenda should show that the attendance will benefit your trade or business. So say you're a club manager of like a health club and it's a health club convention, that would obviously benefit your trade or business. If it's held outside North America, you are typically not able to deduct it unless the meeting is directly related to your trade or business. And two, holding the meeting outside North America is reasonable considering like industry location, previous meetings, organization purpose. So say you have a ski company and it's held in Switzerland. I think skiing is big in Switzerland. That would make sense, but I could be wrong on that. Don't quote me. What's considered North America? Obviously the 50 states, Puerto Rico, Virgin Islands, Guam, Canada, Mexico, Central America, Panama, I think that's Central America too. Aruba, the Bermuda, Bahamas. Bahamas is a pretty nice spot. Atlantis. And if the business convention is held outside this area, you must prove why this location was necessary, and typically that shouldn't be too hard to do if it's there for a legitimate reason. This is even more niche. This is combining the two sections we just talked about. So say there's a convention on a cruise ship, deductions are going to be capped at $2,000 per year, and all cruise ships are considered cruise ships. I don't know why the IRS says that, but that's how they go, even if used for business purposes. To qualify, you must meet all these conditions. Events directly related to your trade or business. The ship is U.S. registered. All ports of call, I don't know what that even is, are in the U.S. or U.S. territories. You have to attach a written statement to your tax return detailing total days of the trip, hours spent on business activities, and the event's business agenda. And you need to have a statement signed by an officer of the supporting organization that confirms the schedule and the number of hours you attended business activities. This is probably the most important part of the video. It's how to prove your expenses. You're going to see later in the video, I'm going to show some court cases where people who, in other cases, would have been accepted these deductions, they got fully denied because they had terrible records and it ended up costing them tens of thousands of dollars in which they shouldn't have had to pay if they just kept good records. So the IRS gives good guidance on how to prove records and how to prove expenses. They even say here, you cannot deduct amounts that you approximate or estimate. What are adequate records? You need to have documentary evidence. So account book, diary, log, statement of expense, Microsoft Excel, photos of the actual receipt. We go down here. So here's an example of adequate evidence. It'll be considered, ordinarily can be considered adequate evidence if it shows the amount, date, place, and the essential character of the expense. For example, a hotel receipt is enough to support expenses for business travel if it has all the following information. Name and location of the hotel. So the Wynn in Las Vegas, the dates you stayed there, for whatever days you were there, say if you're there for a week, the actual days, January 1st, January 8th. Separate amounts for charges such as lodging, meals, and telephone calls, so have it itemized. And here's an example of a restaurant receipt. That's enough to prove an expense for a business meal, but it has name and location of the restaurant. So you say Nobu, California Pizza Kitchen, number of people served. You write that in yourself, you have them write it, and the date and the amount of the expense. This down here, duplicate information, not really applying. Timely kept records. Make sure you do it when it happens. Do not do it, say, a year later or months later. Oh, let me write this down. This actually happened. The courts have seen they do not like that, and they will not hold that to the same standard as they will with evidence taken that same day or say the day after. You want to have a statement proving a business purpose. So write on the note, have it in Excel, have it on your computer, why you were even there. Okay, I was with this potential client discussing the terms of our contract, negotiating a contract. Not just we discussed real estate. We discussed our business plan. How do you discuss it? Make sure you tell them how you discuss the actual plan. Here's table 5-1. If you have the expenses for, say, travel, then you must keep records that show details of the following evidence. So amount, cost of each separate expense of travel, lodging, meals, incidental expenses such as Ubers, tipping people, taxis, fees, tips, time, dates you left and returned for each trip, number of days spent on business, so not personal. How much were you doing on business? I was there for 6 days. On the 7th day, which is in between those days, I went to Disneyland. Place your description, destination or area, travel, name of the city, town, other designations, so Los Angeles, California, Las Vegas, Nevada. What was the business purpose of being there? Oh, well, you put whatever here, business purpose for the expense or the business benefit gained or expected to be gained. We were there for a 3-day seminar on training how to do better at sales. It was a 3-day accounting seminar on how to do better at income provisions. And what's the relationship? Usually NA. I have 2 court cases here for you to show the importance of taking good records in your business adventures and your business travels. Here's the first one, Steward versus Commissioner. This is a recent case. This is from 2018. And what had happened was this guy, Steward, was a background in music. He was a musician. He performed with his dad, which is pretty cool. The band's called Twice as Good if you want to look it up. It's a real band. So what had happened was in 2016, the petitioner was in business school at Sonoma State University. He worked on a project concerning business. Didn't substantiate it, he just said business. Opportunities in Asia, and became interested in the music industry in Japan. So he went to Japan, he took multiple trips there, learned about the culture and possible business opportunities. He stayed in local hotels. Keynote, he did not sign a contract, he did not perform in Japan, and did not make any money in Japan or royalties. He retained some of the business records, some personal records, but he did note that his records were destroyed in a fire in October of 2018. He did not maintain a contemporaneous mileage log, but he created his own mileage log somewhat after the years in the issue that lists the date, time, business purpose, and miles traveled between his home and various places of employment. For international travel, petitioner created a travel expense report that lists the cost of flights and hotels and briefly describes the purpose of each trip. He retained numerous receipts for flights and hotels. We scroll down here. What did the court think about this? He deducted a total of $19,000 in travel expenses for all the years of issue. In support, the petitioner introduced travel expense report that lists the trip dates and costs and briefly described the purpose of travel. He also produced receipts for flights and hotels. He described the trips as market research and noted various reasons for his trips, which include visiting the Sony Records office in Japan. He developed a meeting to develop a music class. He observed the culture and discussed the blockchain in the music industry, which is pretty cool, I guess. At trial, he testified that his travel expenses to go to Japan or to learn about the culture, visit venues, network with people in the music industry in preparation for him to perform in Japan. This wasn't enough for them. He did not provide sufficient evidence to corroborate his reasons for business travel. There is very little detail about the meetings he had there and the business purpose of any meetings in there. It's clear he didn't receive any income there going to Japan. What does this tell us? Guys, this isn't enough to say, oh, I'm doing market research. I had a meeting with a few people to discuss blockchain. What did you actually do? And explain it in very good detail. You can't just say, had a meeting with person X to discuss Y. What's the real reason you were there? Discuss in long form. The longer, the better. The more detail, the better. Let's go to the next case. We also have Burden versus Commissioner, which is a rather ironic name. There's a good tax burden placed on this guy. This is also kind of recent in 2013. So Burden was a pastor employed by Allegheny West Conference of Seventh-day Adventists. I don't know what that is, but it's a pastor of some sort of religion thing, spreading the gospel. Travel. We could see he traveled all over within the United States, Alabama, West Virginia, Baltimore, Maryland, Cleveland, Ohio, Dallas, Texas, Virginia. He went all over the place. Dominican Republic, South Africa. So this is the key facts here. When he's at South Africa, he was there for 2 weeks. He testified that he was invited there to do morning devotions, speak on various occasions, assist a naming ceremony and a wedding renewal ceremony. And he gave prayers to dedication, renewal of vows, and they visited an apartheid. It's like a big term now, apartheid museum. So he was there for a long time to do business. Now, do we think he took accurate records? No, he didn't. Petitioners claimed basically $11,000 of deductions for traveling expenses. I can't highlight that for some reason. And he testified this amount included the expenses of both his domestic and international travels, so to all those states and to South Africa and to DR. Petitioners, however, did not break the further amount down, nor did they offer any bills, receipts, or other records to substantiate. This could work. He went there for legitimate work. He's a pastor. He went there. That's his job, to teach religion. But he just didn't have any receipts. He did estimates he made an estimate himself at $100, 100 days for $180 a day. He made that himself. There was no reason for that. So because of this, see Lucas for Commissioner for more details. They failed to substantiate or adequately prove their entitlement to deduct any of the expenses, and thus he was fully denied. I hope you guys enjoyed this video. If you have any questions or comments, please comment them down below. I'd love to answer them. Any video requests, comment them down below. Let's keep growing. Let's keep learning, guys. Thank you.